Welcome, everyone. My guest today is Lead Analyst Logan Mohtashami to talk about Jobs Week, mortgage rates, and purchase apps. Logan, welcome back to the podcast.
Sarah, do you know what Donald Trump did?
That is too broad of a statement. No, you're going to have to narrow it down.
President Donald Trump, who a lot of people think I'm working with because of the whole shadow Fed bank thing, or Fed president, and sharing the articles and everything. I got all these messages that Trump is taking my marketing line. I was like, what are you talking about? And I go and I see Trump is selling daddy shirts.
Oh, no.
And I was like, what? So I totally get why people might think we're working together. We're not, but we're not working together. In any case, there's only one chart daddy. There's only one chart daddy hair, and there's never going to be another chart daddy. So no, he's not stealing my mark. He just has us selling a t-shirt. By the way, why aren't we not selling chart daddy t-shirts, hats, wristbands, headbands, get the old 1980s basketball outfits on. That's what we should be doing.
We need sweatbands to say chart daddy. I haven't even thought about sweatbands.
100%.
For when we play pickleball. That's what we need.
We don't play I don't play pickleball. I'd rather die before I play pickleball. I play basketball, but pickleball, no.
Oh my gosh. Okay, well, we have a lot to talk about. Top of that list, because this is going to be airing on the week of July 4th, it's Jobs Week. That is crazy that it came around so fast.
Yes, it's Jobs Week, and it's a little bit more important Jobs Week because the Fed is going to meet at the end of July. Of course, there's no Jobs Friday because it's July the 4th. So we're going to get a ton of data here. And, it's interesting. Friday morning, Neil Koskari, our favorite Neil. Yes. He came out and said, I'm up for 2 rate cuts. And I just want to remind everyone, if there were no tariffs at all, they were only going to do 2 rate cuts, right? But he said, I'll do 2 rate cuts, but if I cut rates in September and then all of a sudden inflation picks up, we might not cut it anymore. So there are lines that are going to be drawn on this from, let's say, Waller and Bowman to Neil Koskari and others. But he had an interesting statement, and we've talked about this before in other podcasts. Like, why hasn't the tariffs hit the inflation data? Right. And we said, LoganMohtashami.com selling t-shirts from China. I got a bunch of them already. I don't need to raise the cost yet. But what Koskari talked about is that he said that they've talked to companies and they said for now their inventory is okay and they don't really want to raise the prices to get customers mad, and they're hoping for trade deals to happen. So when you hear Fed presidents, and it's not just one or two, it's a few of them saying, well, if more trade deals are done, we can get more dovish. And I thought that was a good framework of, listen, we can hold out, we're holding out for trade deals or stuff like that. Then at least there's a little bit more clarity, but you could clearly see that the Fed probably wants to be a little bit more dovish, but they need a little bit more clear, kind of a better idea of where we're going with this tariffs. And I say that today because the July 9th deadline has been moved on to September. So the goalpost has been moved, right? And so we're not sure yet. And this is, the byproduct of Godzilla tariffs and taking them away and giving deadlines and everything. But now we look like we've moved some of them back out there. So it's an ongoing process. It's not like such a sharp defined thing, but for Koskari to basically say, yeah, we've been talking to people, and like we've talked about, the Fed is going to use a lot of phone calls to talk to businesses to see what's going on. And the fact that businesses say, we don't really want to raise prices, we don't have to yet, and we're hoping that trade deals, gives you an idea of what the Fed might be thinking about on the inflation side. But as always, paper, rock, scissors, the labor data matters more than inflation. And we're here Friday morning. We're not that far from the year-to-date lows on mortgage rates. As the 10-year yield is, I think the last time I saw it was 424, 425. Spreads are better this year than they were the last 2 years. So mortgage rates heading closer to 6.5%, 6.70%, around there. So that's kind of around the year-to-date lows. But with jobs week, if these data lines get weaker, that's the only report now before the Fed meets. And I still don't believe they'll cut rates in July unless jobless claims data start to get weaker. But today, personal consumption data, the spending was lower, the incomes were lower just because of Social Security payments one time only. But it becomes a more important jobs week because of the timing of the next Fed meeting.
So, we had Bowman talk about July rate cuts, and then we now have Koskari saying September. Do you feel like, is it September because of when we're going to see, because of the new deadline for trade deals, or you think it's just those two things are not related?
I would always go in the camp that they won't cut in July unless the labor market is really starting to get weaker for them. And we always there's so many different views on the job markets. A lot of people show me the continuing claims chart, and continuing claims are at a 3-year high, but historically they need to be a lot weaker before you get into the recessionary camp. And it's not me saying this. I've always stressed this. Looking at how the Fed reacts to labor data, they need the labor market to break to get really dovish. So continuing claims at a 3-year high would warrant, when are we getting to neutral? Why aren't we in neutral now? But it doesn't get them to kind of pivot to maybe a more an economist stance. But again, we're already near year-to-date lows. If we have a week of softer economic data, what does this remind us of? Last year.
Yep.
Last year, when the Hodor line was broken, it was 3 of the 4 jobs report was weaker than anticipated. And because of that, the 10-year yield really pushed bond yields much lower than what where the Fed wanted to see. And then the Fed cut rates 0.5%. All the other data lines started to improve. So yields naturally and should have gone up. But we're below 435. So what happened? You got a lot more dovish Fed talk. You have a shadow Fed president in play, but now we have the labor data, and that to me matters more. So next week, because of the timing of the Fed, is going to be key. Jobless claims, ADP, jobs Thursday report. If we keep on seeing softer data, it gets harder and harder for them not to get to neutral policy faster. That's the key. I think that is a legitimate discussion everyone should be having. Why aren't we at neutral policy yet? If the labor data is getting softer, if you're telling American citizens, I know it's hard to find a job, but tough, right, you're not breaking yet, So I love that discussion because Nick Tamiris of the Wall Street Journal agreed with me on that, and that's why he asked that question as well to the next Fed meeting. That's going to be the key on that. So a big week coming up on the labor side.
Wild to think that we could have a replay or some sort of replay of last year, because again, if we see weakness, then the bond market will react, rates will go down. And then if the Fed does something in September, rates could actually go up based on them reducing the Fed funds rate. Like, this is crazy.
It is interesting where the Fed funds rate is now. The 10-year yield looks normal, maybe slightly pricing in more weakness. The closer you get to 3.5%, the easier it is to get towards 6% and stay there for a little bit longer. So we're getting into that nitty gritty period of time where, because they've already cut 1%, where are we going to neutral? How are we going to get there? And again, what's always moved mortgage rates is weaker labor data or economic data or perceived slowdown in the economy. It's happened in late 2022, early 2023, 2024. When Godzilla tariffs came in, the 10-year yield was below 4% because people thought we're going into recession. I didn't agree with that. But now that we're below 435 on the 10-year yield, now we got Jobs Friday. Now we got the shadow Fed. Now we got Waller and Bowman. It's a little bit of a different ball game now. So that's why the labor data is key. This is probably not a week where the Fed can, handle a really weak jobs Thursday report or multiple data lines because of all the visual. Remember, we think of what the White House is doing as a high school basketball coach working a ref and
Right.
then telling the ref, that guy's holding my guy. He can't, he's got an advantage over my player. And all of a sudden, if we have a bad week of labor, oh my God, they're all going to be yelling at him. And then remember, they are human beings, and
Right.
human beings will start to feel the pressure, right? And that's what happened last year. Powell admitted it. Hey, listen, we waited too long to cut rates. Logan was right. We are going to wait to as last as possible, and then we're going to have to do it because the labor data forces us to do it. And that's what occurred. The labor data was getting weaker than they thought, so they went ahead with a 50 basis point cut. And then all of a sudden, it stopped getting weaker, and they're like, okay, hold. Wait. Oh, there it is, the bad report. Okay, let's go back. So it's kind of that back and forth thing, or as the Cleveland Fed president said, Hammock, we're going to wait to play catch up. And then when you see the bad data, then we'll go, so.
Okay,
The
he
world
did.
we live in, the world we live in, Sarah.
Powell did not actually say Logan was right. He just
I know, but listen, if there's only one person that's done the labor over inflation thing since 2022, so I'm taking my luxury leeway on some of these
Yes,
things.
I will give you that. You deserve it because you have been labor over inflation this whole time. So you deserve that. Give you that. But so interesting. I think, we talk on the weekends when things happen. And I was so surprised that we didn't see more things happening in the bond market last weekend. Okay, a couple weekends ago now when this airs, when we bombed 3 nuclear sites. Like if that doesn't move the bond market, like the only thing that will is the labor data.
Yeah, things have calmed down. Of course, I think geopolitical trading has become more prolific and efficient, and you kind of know that Iran is giving us clues that they don't really want to extend this into a bigger war. So, oil prices, as soon as they got one good headline, just tanked lower, as it should have. Um, when we think about this weekend, who knows? Who knows what will come out? The inflation data report came out today, the personal consumption, and picked up a little smidge, a little hotter than estimates. But again, we are still here, where the pre Christmas egg spike nog, Jerome Powell would have had rates lower than what they are right now. But it's a little bit different, and we still have two handles. We've had two handles on the PCE data for a very long time now, but it does not matter because they want to wait. And even if there weren't any tariffs, they would have waited. So I think it gets maybe this will be a drama-free weekend. But it doesn't really matter because we're going to have to be on 4 times a week soon, and then we're always here on Mondays, and we'll go over everything. But uh, I just think we're the second half of 2025. There's so many things that are up in the air that it just makes get the popcorn out, get the Cheetos out. It's going to get really interesting.
It is already interesting. And I think we just jinxed it by saying maybe this weekend nothing will happen because I think we said that last weekend right before all that craziness happened.
Yeah, I mean the world is different with how information gets disseminated. And I mean, think about 20 years ago. Could I show people live oil charts on my Instagram stories and show what the bond market's doing, after we bombed, 3 nuclear facility sites of Iran? No. But again, we're here to keep everyone versed. And where we are right now with the 10-year yield and mortgage rates, it's pricing in maybe a softer jobs week. We'll see. But if that occurs, it'll be really interesting to see how the 10-year yield reacts now. And then going out in the future, what happens in that July Fed meeting. Because it doesn't necessarily mean if there is no rate cut, it's not necessarily a bad thing. It's the language that
Right.
happens. And again, we have weekly jobless claims data that becomes a little bit more prolific as the cycle gets older. So things to keep an eye on. And yesterday the headline jobless claims was down a little bit, but the continuing claims is starting to pick up some speed. There's some seasonality into it, but this is starting to get a little bit more noticeable out there for the Fed. And again, my thing is that not what Trump wants, like 2.5% rate cuts right away, but when do we get to how bad does the labor data need to be for the Fed to go to neutral policy and stay there and then see what happens with the economy? That I think is that's the more sophisticated debate that people should be having with every single Fed president out there.
Okay, speaking of a sophisticated debate, on yesterday's podcast, you had like 1 minute to talk about purchase apps, but I want to give you the opportunity to talk a little bit more about that because what is it, 21 weeks? Is it 21?
We've been pushing that storyline so much because a lot of people are like, housing's completely rolling over, sales are crashing, and then I show the purchase application data and something that nobody tracks. I mean nobody. I cannot find a single soul that's been counting the year to date, and they're just shocked. I mean, everyone is just shocked that we have 21 straight weeks of year-over-year growth, 8 straight weeks of double-digit year-over-year growth. The new home sales purchase apps hit a post-COVID high 2 months ago. But again, I just always like to emphasize rates went lower this year, not higher, and the new listings data is up. So whenever you're working from extreme low percentages, be a little bit mindful of that percentage increase, that first move higher. But for the tracker data, by the time this comes out, I want to see, does the pending home sales data start to perk up a little bit more now that we've had 8 straight weeks of double-digit year-over-year growth? And to me, it's like if you have something material, you got double-digit year-over-year growth. So the pending home sales data that came out, positive year-over-year. And again, we've been highlighting, guys, we're going to have really low bars on the year-over-year data. So if you see year-over-year growth, don't be surprised. We've been trying to highlight this for the next 5 months. Sales can be flat for 5 months in a row, and we'll have positive year-over-year data. So the tracker has showed year-over-year growth now for some time, but I want to see, do we get any more kick? The closer we get down to 6%, do we get any more kick? Because that's what's the data shown us in the past, is rates between 6% and 6.64 is when the housing data gets better. So we're slowly creeping our way down there. And the spreads, man, it's all, if the spreads hadn't improved from 2023, we'd have a totally different conversation, but that's not the case this year.
I think this conversation is so striking because on a regular basis, even just yesterday, I saw on the major news site, they were like, housing has had the worst year ever. It's crashing. It's terrible. And who is their source? Melody Wright. And I was like, and that's fine. Melody, fine person. But like, there are people who this is their job. Their job is to talk about how housing is crashing all the time. And there's definitely outlets who are like, let's revisit that. And so this is the data that I like us to talk about, because if it indeed was crashing, you, Logan Mohtashami, you're not a forever anything. You would be like, listen, this is a concerning sign. But when it's positive year over year data, when we're holding steady, there's no sign of that.
So I recently had a debate with someone, bless that man's soul. He came on with Spaces to me, and he kind of said, I think existing home sales are crashing, and I think it could go down to 3 million and possibly 2.7 million. And I sat there and I go, this guy's no idea what he's talking about. He just doesn't. You could always tell the experienced people who track data versus the people who just yap off. And I kind of told him, I said, we've never ever had data ever in history where the forward-looking data are positive and sales crashing. And the reason I say this is that, remember November 9th, 2022, we said if rates fall down and the forward-looking data gets better, everyone's going to miss it for 6 months because they're going to be they're going to be working off old data, and they're going to say home sales are crashing and getting worse. So here we are again. This is actually the 4th time this has actually happened in the last few years. Our pending contracts are slightly positive. The purchase application data is slightly positive year over year. That hasn't occurred in a while, both those two together. If sales were really collapsing, we would see it in both. And then when we see it in both, we tie it to the existing home sales going back to the early 1990s. Back when I had blonde hair, shaved head, sideburns, whatever. But here, it's holding up, and it's actually growing on a year-over-year basis. I think what is always the case is everyone overweights prices more than anything. And when they want to do doom porn, home sales are crashing, they always said prices follow volume. That was all. It's so funny because the whole housing crash crew, by the way, I have all your forecasts. You guys are all terrible. You guys had this whole prices follow volumes, and a lot of people are down. I've got 19 to 22 to 62 to 42% home price decline forecasts, and none of that's here. because these are not serious people. Serious people show you models and tracking sites and like our tracker, we show this to everyone. If it is negative, it is negative. You can't hide it. But that's not happening right now. So the supply is growing, right? But in terms of home sales crash, no, it's just not the case. And it really does confuse anyone because so many people listen to the headlines and they actually have never seen the purchase application data chart, and they sit there, they go, this can't be true. Yeah, it is true. Who do you listen to? Oh, you listen to doobers. You eat too much salty food. You need to exercise, drink more water, and sleep more. Okay,
Okay,
you
you
need
don't
to.
know all of that. You don't know all of that about.
Oh, Sarah Wheeler, trust me. Men, loser guys, all behave the same way, and there's a lot of things they do similar. So it's not shocking to me.
Salty
Oh,
food.
but the person even said, I do all those things, but I'm surprised. I said, yeah, because this is what the data is. How many people actually provide you a live database tracker for the entire housing market? Nobody, right? Live weekly data, but we correspond it not to just the forward-looking demand, but the economics behind it. Like when does purchase apps get better? When the 10-year yield, mortgage rates, everything. We put it all together so you can't say you didn't know.
That's right.
People who don't read the tracker versus people who read the tracker. If you read the tracker, you're looking at everybody thinking, what is everyone talking about? I don't see home sales crashing. And you could see the inexperience from people when they never track data. Because a lot of people say, well, pending home sales just had the lowest print ever. I said, yep. And every forward-looking demand is positive. That's why we always warn people, be careful of the pending home sales data for the NER. It can be very wild month to month. Look at the weeklies, look at the trackers. We're not saying housing's booming or anything like that, but it's not crashing in sales. And this happened last year. Remember in 2024, we did the same thing last year. I said, the forward-looking data is getting better. Nobody cares. And then we're going to have a couple 100,000 more home sales and everyone's going to go, what happened? And we did the same thing in 2023. We did the same thing at the end of 2022. It's not sexy to talk about, boring, forward-looking macroeconomic data. But the chart daddy is trying to make it as fun as possible. And the chart daddy, who should be selling some shirts and saying, nobody, who does it better than us, or whatever, have a new time. We're here to teach. And then when you visually can teach, then you can tell everybody.
That's right.
Certain people you should listen to, certain people you shouldn't.
Absolutely.
You just remember, there is a reason why there's only one group in America that love doom porn. And it's the anti-central bank people. And these people were born into some bondage of doom porn, and they just can't get out of themselves. This is why they're all of them together. They always do the same thing. Why? Cults don't change. They just get older. And what do we say about men getting older? It's not pretty. And they
I
get
don't say
older
that. You
and they
say
get
that.
crankier and they become angrier and they don't even know. I think one of them told me I should jump off of a tall building
Oh
recently.
yeah,
I
I
just
did see
smiled.
that.
Yeah, I smiled and laughed. And I said, homie, you and I should have a talk on spaces. I said, listen, to the younger guys that are part of this cult, you don't have to be part of them anymore. You live once in this world. You live in America. That this time you won the golden ticket. But you don't have to age and die with this cult, because what you're going to leave behind is just a series of doom porn. No. You don't want to go to the grave with that. Oh, I just doom porn post every single day.
Well, and if you're in this industry, your business depends on you saying the truth and also, exciting people, not being like, yeah, it's all terrible. I don't know how people who have that mindset do in our industry at all.
We reward attention in this country more than we reward facts.
That's true.
And I'm trying to change that by making facts a little bit more entertaining. Of course, me challenging people to live debates and getting their forecasts and stuff like that. But this is the society we live in, and that's why we created the tracker. You remember how desperate I was to get the tracker going? I'm like, I need to get this started
As
and get
soon
this
as you had
going.
Altos research at your fingertips, you were like a kid in a candy store. So yeah, people should read that every weekend. It comes out on Saturday.
And just remember, when everybody reads the tracker, realize that you're like 1 to 3 months ahead of everyone else. And it's not fair. I've always said it's not fair with the data that we have, because everyone's talking about older stuff. So again, it's just the numbers. If they are positive or negative, we don't care. We go with what the numbers tell us, right? And we can interpret it. We could put our own models or anything like that. But it is the fact. And of course, facts aren't a sexy thing, but we try to make it fun. And then once you learn about it, then you could talk about more confident, and you could tell Uncle Dave he needs to get a life. And then you could tell your male friends who need to sleep more and not eat salty foods and act better, and there we go on in the future, and life finds a way, America wins, and good things happen.
Good things happen. Logan, thanks for being on today. As always, we will see what happens over the weekend and then be on again tomorrow once this airs. So thank you.
Yes, and Wheeler, you got to get the Chart Daddy merchandise going. If Trump's going to sell daddy shirts, then I got to get in the Chart Daddy section.
I don't know how that's my job. I do not. I have a whole other job, not just managing Logan.
You're my handler, so you're handle the merch, right? You don't want me to just start designing the shirts. You have authority better than I do.
Okay, merch coming. All right, thank you, Logan.